What's up, guys? Welcome back. This video today is one that I'm pretty excited about. We're going to be going over how I went about building up my small account, some things I learned, big mistakes I made to hopefully get along with that process. Um, and then my big focus here would be the mentality behind trading. It makes up a vast majority of the trading. Most people at some point we'll be able to get key levels, support and resistance, stuff like that. But where we really see a big difference is in emotions when trading, stuff like that. Before I get into that, I just want to go over my setup, what I use to trade, and what I've used to help with my system. So the first thing is WeBull. I use this for options trading because we can trade unlimited with settled cash. It's the only broker that lets us do that at this point. So if you want to day trade, Webull is definitely my recommendation. It's not a necessity, but I'll post a link with the ability to get 5 free stocks if you click and use the link. The second thing, definitely not a necessity, but probably the most beneficial part or most part that I've changed that's made the biggest impact to my system and my strategy is unusual whales. I use this for flow. It really helps me with building a watch list. I'll use it intraday when looking to enter a trade. So that really helps there as well. And then the last thing would be charting software. For me, I personally use Trend Spider. I just like the layout of it. But you can use, Thinkorswim, TradingViewer, two of the other more common. All right, now that we got, the basic system setup, stuff like that out of the way, I want to go over what really helps and some key areas of building up a smaller account. One thing that's been able to change me, why I've been able to succeed in trading, is just consistency. And then also not quitting. I'll break those down before we start, and then I'll better explain them throughout the video and try to make more sense of it, as well as how I go about execution of plays, stuff like that. All right, so my first thing, one of the most important to me is risk management, right? This is something I really struggled with when I was in my infant stages of trading, as I like to say. I didn't really set stop losses, got emotionally attached to stuff, and I didn't trust or really understand price action. Secondly is build a system. I'll make a video later on this about building a system, go more in depth and stuff like that. But building a system goes with being self-sufficient, and it allows us to trade on our own. When I look at a system, what I did in order to create my own system is, what is my personality like? What do I look for in these plays, and how can I make it repeatable? So the biggest thing in my system is simplicity. I'm an overthinker. I will overthink absolutely everything. So that was one thing that I really keyed on. Keep it simple. I don't want a ton of indicators. Some people use EMAs, which work for them. Maybe you want that. That's fine. But as you notice, the only things I keep on my chart are lines, key level support and resistance, VPA, and VWAP. That's it. It helps me not to overthink. And so that was a big part of my system. The second thing of my system is risk management. That 10%, stuff like that. So these all come back into morphing a system. That's basically my big takeaway from my trading so far, is being able to build a system, trust the system, and then fine tune it to places of your trading game that are weaker or that you struggle with. And this is something that we can do through learning. And I'll get into how I learned about trading options, how I learned about support and resistance, stuff like that. Another one is price action and key levels. Understanding price action, understanding key levels. And for this, my biggest recommendation, my biggest point of advice would be to pick 2 or 3 tickers and just learn their price action, right? Learn them like the back of the hand. Learn them like you're going on a date. Learn them so well that you can explain it to someone who has absolutely no clue about stocks. Last part that's really important when it comes to trading and that has really helped me is to control your emotions and execute your plays. Execution is very important, right? Like, we can say we're going to do something, but being able to actually execute on these plays is something that comes with time, practice, and just, becoming self-sufficient, building that system, trusting the system, and then in the end, controlling the emotions is the biggest part. When I built a system or my strategy that I use to this day, the thing that really I wanted out of there is to make my system as technical and as simple as possible. Remove emotions, which the consistency, the ability to win multiple times over, and repeat it. Losing in the stock market is inevitable. The key part is risk management, not to lose too much, and then also how we rebound from those losses. First thing that has really changed the way I've been able to trade is the flow. So this is something that is very useful even for smaller accounts, But one thing I really like, and this is how I go about building my smaller account watch list, closer in the week, because at the end of the week, premiums start to drop, strike price starts to drop, so we can play a little bit more tickers. So I focus on this mainly Monday through Wednesday. Thursday and Friday we can get a little bit more, but that's not what I wanted. But you can use hot chains and tickers. This is how I go about building my normal watch list on unusual whales. But this includes every single one, or every single of the top 100, and most of these strike prices are pretty high. So what I do is I go to this option dashboard here, and I scroll down. Let's see, most active weeklies under 1, no indices, and the indices are up here, right? So we can use these. These, obviously on a Friday, it's a little bit different, so that's all right. But throughout the week, mainly that Tuesday, we can use this really well to go about that. But if you don't have unusual whales, I actually have made a list of 10, I think it's around 10 or 11 of the top 100 tickers that all have under 0.75, both on the put and the call side, to make a watch list out of that if you need. So I'll put that on Twitter, tweet that out so it's easier to access. So one thing that sticks out to me on this hot chains and tickers, right, is DKNG. It's one of my favorite smaller, hold up, I gotta hide these. It's one of my favorite smaller account plays. It's actually how I went about really learning a certain ticker and learning how to do this. So the reason our own watch list, our own plays are so important is because, we want to be able to do stuff on our own. We don't want someone to hold our hand, when to play a call trigger, when to play a put trigger, breaking down levels, price targets. We'll get into all that stuff when I go through the mentality and execution behind trading. But the thing I look for here is stuff out of the money with a close date till expiration, right? So the first one to stick out, very bearish here. The highest chain is a 12.23.26 put. If we notice, that's a decent drop. That's a $2 drop from where it finished. All right, cool. So I'm going to do next, I'm just going to walk through this entire process. I tweeted this one out. I like it a lot. But first thing, I'm going to look at this on the daily. In order to find key levels, what I do is I take from wick to wick, high to low. We have about $3.5, $4 move. We'll use 4. So I take 20% of 4, which, let's see what that is, 10%, 48. So about 80 cents on either side of our finishing point, closing price, right? Our close is 28.67. Okay, cool. So I'm going to break this down. I'm going to go to the hourly chart. And I'm going to look for key support and resistance levels that have been hit multiple times and have acted as both support and resistance. In this case, one that sticks out here, 29.25. And then this, let's see here, low, 29.45. Then on the other side, we have this POC down here. about 28.15. Cool, I like those. What I'm gonna do then, break this further down and go to the 15-minute chart. This process is something that I've definitely taken a lot of time to be able to kind of go through things, be able to master it, but it's really important, and it's definitely changed how I trade, right? So just based off these two lines here, I can play these on the upside and the downside. After that, I'm gonna go through and set some price targets. So price targets, this 30.05 and this 30.95 on the upside, and then on the downside, looks like we're gonna be a little bit harder to play, but I like this 27.4, and then down in the 26.5 range is another one. So that's how I kind of go about that. Being able to identify the key levels is certainly really important. And that's how I go about identifying them, especially if you're a smaller account, looking to build, looking to do things on your own. That's very, very important to be able to identify support, resistance, and also being able to find your own plays in the long run. It'll pay off. I'm going to use MSFT here. It was on my Friday watch list to go over the execution piece, mental piece, which is huge, and how we can use that to build up this account, right? So the first thing, when we're looking to enter plays, we're going to stay on the 5-minute chart when we're day trading. I exclusively stay on the 5-minute chart when on the actual day of the play. So the two levels I had here outlined were 323, 327.9, right? So the first thing I noticed here is a gap down. Cool. That's awesome, whatever. I'm not going to play this until we get a retest on gap downs. I have another video about playing gap downs, but basically I wait for the retest of the gap down. If it reclaims that put trigger, I'll play calls. If it's rejected, I'll play puts, right? So another thing when it goes to entering into plays, I'm waiting for a close above or below our put or call trigger, right? But I'm also going to use the type of candle in order to enter into this trade. So right here we have this very extended long upper wick that shows us how many sellers are stepping in right at a resistance point. Resistance point, holy cow. So it's going to shoot us down right here. So I'm going to enter puts here, and it just keeps tanking a little bit. Another really important thing that I think really helps me is I keep SPY open daily, every day, almost every minute when I'm in the trades, just in order to kind of get an understanding what the overall market's doing. If we have a relatively strong ticker, weak ticker, but the main thing here is I'm trading price action. The thing about playing large caps is that most of them tend to follow support and resistance much better than a penny stock. And I'm trading price action. Flow helps me do that. So say I'm in this Microsoft play here. I'm going to use my intraday flow. I use this, that's not what I wanted. So I'm going to go to the live flow. And I'm just going to put in whatever ticker I'm in. And I want to see, kind of the sentiment, what's the flow, especially these big buys, right? Like we have some big buys here. And I'm just going to look at this flow. If we have really bearish flow that comes in at a resistance level, it helps me with the conviction. But the overall thing is, the price level, the key level, the price action is what we're going to trade off of. One question that's been asked, I've seen a decent bit here and there, was what type of order do I use when trading options, right? So the first thing is, most of the time, if I'm playing like here and I catch this breakout, right, I'm going to use just a market order and have it fill, right? Most of the time I use that for scalping. I like it a little bit better just for scalping terms. But if we miss this breakout, we don't want to chase it, right? We're going to wait for a retest. If it holds this retest, I'm going to use a limit order to enter here on the bid side. I can move it up ask side if I really want. But the end goal is to try to get in our options around as close to this line as possible. One thing that I want to add in as well about the type of order, right? It depends on the ticker. Look at that options chain, look at the bid ask spread. That's where probably the most important part of mental trading comes in, right? And that's risk management. So for me, Whenever I enter into a trade, I set my stop loss at exactly 10%. That's cool, whatever. I set it there when I entered the trade. When my trade becomes profitable, no matter what, I move it up to break even. Why? This is something really big, and it took me a long time to figure out. So the reason I do that is because those little paper cuts, that little bitty bit, that maybe 3 to 5%, those add up over time, right? So conversely, if I win 3 to 5% and continuously can compound this, it adds up as well. Another thing that goes along with that really well is just the overall mentality when you are red versus when you're green, right? When we're red, we're like, dang, I don't really know anything about this, whatever, have this really pessimistic mindset. When we're green, we feel better, we stress less. Yeah, we could have missed some percent here or there. That's going to happen. That's the nature of trading. We can't exactly control the market or anything like that, but we can do our best to read price action, to read these psychological support and resistance levels, and be able to play off of that. So that's something that really helps there as well to boost our mental game in order to build these smaller accounts. Overall, the only difference that I would say is huge for small versus bigger accounts is the plays that we can play, right? So say a Microsoft option usually is 1 to 2 in the money, or OTM is usually, like maybe $3 to $5 strike price. A smaller account doesn't want to put their entire account on it or even have enough for that. Other than that, the difference between a small account and a big account are relatively small. Of course, you can put more capital on it with a big account. Cool. And because of that, risk management is something that's very, very important and something that I struggled with immensely. When I first started out trading, I wouldn't put a stop loss because I thought, what if, right? What if it goes up? Cool. Most of the time, it went down because I thought I was hitting bottom, but I obviously wasn't, and it was just plummeting, and I would lose, a bunch of money, and then I start freaking out, try to sell it wherever. So what we want to do there is, try to control emotions as much as possible. I'm going to go over position sizing, when to scale out, when to scale in, stuff like that. So one thing that is very important to me and to my system is I never average down. Why? All right, so I respect my stop loss no matter what, but I can always get back into a play, right? The next thing is sizing. So a big thing here is when we're first starting to trade, I like to play just one contract. Why? Because first, we learn how to trade. It's easier to trade. Second, we avoid those big losses. And third, we can start to build up some confidence. Then I'm going to get into scaling. So scaling is something that's super important, not only to take the profits, right? So the first thing I always do when I enter, right, I have that stop loss set at 10%. Once we're green, I move it up to break even. My first target always on scaling is 20%. Why? Because every play I enter, I want a 2-to-1 risk to reward. If I'm risking 10% with my stop loss, then I want a reward of at least 20%. That's my first thing. That's not always going to happen, but that's why we have good risk management. Secondly, when it comes to that, so say we have a play, say we enter, we enter here, get a certain percent, something like that. We're good, whatever. If my play is before 20%, but I see a bearish candle such as this, big here, big shooting star, or even a bearish engulfing like this that's broken through our key level, I want to take the profit right away. When we're playing calls, we want to sell the rips, buy the dips, right? And inversely true with puts. The second place I look to scale after that 20% is at a big resistance area. All right, so say I enter here. We'll say I enter here on this retest of the intraday 319.6 level. Cool. Enter here. Cool. Probably get about 20% here. I'm a third scaled out. I always scale in thirds. That's just kind of how it makes sense to my mind. Don't necessarily have to, but that's cool. I scale here. We have this little consolidation, and then I know my put trigger's coming up here, so I'm gonna wait for the retest. right? And I sell here on this. I'm 2/3 scaled out, and now I have runners. For runners, my stop loss is still set at even, right? I'm going to move that up to about 20 to 30%. In terms of the smaller accounts in this frame, I'm talking like, maybe $100 or less, where you only have one contract. I always would scale out at that 20% or a big resistance. Yeah, I could have made more, but I also lock in this 20%. Compounding our gains and consistently being able to repeat this is what's really one of the most important parts of building up a small account, right? A big thing when it comes to beginning to trade is building the watch list is cool, right? But one thing that really helps us more is preparing, being prepared, having a plan to trade, right? So right here on Microsoft, if we retest that 323 and we close above, we notice that 325 is a very big resistance. And that's shown here also by this VPA volume profile. I'll go over that a little bit more when I talk about my system and how I got to stuff like that. But we see that here. So if I'm prepared by putting a line, throw a line in here at 325, cool. Then I know that I can scale out here because this is a very big resistance. I also know that if we get above that, we can have, a pretty big move. So that's something cool. Preparing before going into your trade is going to make your trading way more profitable, and also shows and teaches us how these lines work, how price action works, and how we can go about trading easier. That's something that's really, really important and can help with trading a lot, helping us build up these accounts, knowing when and where. Learning price action is absolutely huge for being able to build up a smaller account. Price targets, right? My price targets are simply that 20% for my scaling. Secondly, a big resistance level or a big support if I'm playing puts. And last, above that, it's all my trading is based off key levels, right? And all a key level is for me is a pivotal line, a pivotal point where we can get the biggest move. So when I'm going through making my watch list, that's what I look for. And that's something that is really important. But also knowing these trades price target, which is just a resistance or a support, is something that's really important and will help us with scaling. So that second scale after our 20% can be that big resistance line. We're out and we just have runners. It's stress-free, we're making money. It's fun. So that's real important and also helps with our mental processing and mental ability. When you're winning trades, you feel very confident. That's a good thing, but also can be a bad thing, right? We don't want to get overconfident to the point where we think, everything's going to go our way and we start to mess with the risk management. That's something that happened to me in my early trading days. I got really confident when the stock market was at all-time highs, pushing, everything was running, and I thought I knew how to trade. Always respect your risk management. Either it goes good or bad for us is certainly very, very helpful. We don't want those highs and lows. Like, yeah, you can celebrate a good win, but we're going to let the losses help us, motivate us, and learn from those. And that's something that I think is very, very important from the mental side and also building up these, our smaller accounts. Being able to learn from the loss, go back, analyze it, is something that really helped me not only learn price action, support and resistance, but also where did I mess up? That and being able to control the emotional side. All right, for this last little part, I kind of want to just go over how I learned, what mistakes I made, and how I fixed these. First thing I have written down is not respecting my stop loss. The other thing that I wrote down is taking alerts instead of learning. So being able to trade on your own, is very, very rewarding, but it also can help you with this consistency that we strive for in order to be profitable in the stock market. It's hard. 10% of traders ended up, being successful in the end, but it's basically what are you willing to do different and how are you going to gain this edge over other traders? So a big thing for me, was just learning. And the last thing that I wrote down with all exclamation points, right, is not taking profits. So that's a big thing for me now. always take profits and never let a green trade turn red. This will not only drain your account, but it also messes with you mentally. Another piece of advice I would have would be just soak up all the knowledge you can. There's people on Twitter who certainly know what they're talking about, know way more than me, and are willing to do education for free, right? YouTube videos, they're cool. Twitter, stuff like that. But the big part about that would be don't just believe something because someone said it, right? Be able to analyze this, be able to think on your own. When it comes to fixing these problems, the biggest thing for me was to build the system that I still use today. Another thing that I would say probably helps the most, no matter who you are as a trader, what you want to practice, learning price action, learning key levels, is just screen time. Go along with that, I always, every day after market close, before I make the next watch list, I go back and analyze the trade. Whether it was successful or not, doesn't matter to me. I want to know, why it was successful, why it wasn't. In the market, losses are going to happen. It's inevitable. But it's how we handle these losses that really shapes the trader we can become and also helps with controlling the mental game, which is really, I'd say probably 50 to 75% of trading, if not more, is just mental. In the end, no matter what strategy or what system you choose to follow, the things that are going to help us build a smaller account up is just consistency, taking profits, compounding those profits, and then managing our risk is going to be a huge one.